Good morning. Good morning. It is Monday, the 6th of February, 2017. Thanks for joining me. It's 8:02 a.m. Chicago time, coming at you from the Chicago Financial District here in the Loop, 9:02 Eastern. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, the markets are looking a little on the risk averse side. Um, this morning, we've got the Euro stocks leading the pack down 1%, a little over 1% with the DAX. The leader this morning is the bonds, or the U.S. bonds, trading up 14 ticks, up 0.96%. Overall, it just looks to be heavy. The market's allocating to safety this morning. Overnight, the key release was the China January Zaisen PMI services, 53.1 versus 53.4 prior. This is the first decline in 4 months. Again, the expectation was 53.4, got 53.1. And then other than that, the Eurozone February Syntex investor confidence came in at 17.4 versus 16.8. The market is expecting a, a fairly quiet week this week, not seeing too much on the calendar. We've got today, we've got nothing in front of us really. Fed Speaker Harker's to speak at 4:30 p.m. Eastern. That's after the pit close. And then since it's Monday, I'll look at the week ahead. The Tuesday gets industrial production from Germany at 2 Eastern in the morning, and U.S. trade balance at 8:30 tomorrow, and then consumer credit and also the JOLTS job numbers, job openings. Wednesday we get crude oil and then on Thursday we get wholesale inventories, wholesale trade sales, Fed Bullard and Evans, and then Friday, that brings us to Friday. Friday we're getting U.S. import prices, a bunch of releases from the UK. So if you're in the FTSE, you'll want to pay attention on Friday at 4:30 Eastern, 9:30 UK time. In the U.S., we're getting U.S. import prices at 8:30 Eastern, and then University of Michigan prelim at 10 on Friday, and then the monthly budget statement, and that ends the week. So a very dull week from the economic release front. There really isn't much to talk about here. And the overnight news was fairly slow. German factory orders posted their biggest jump since December 2014. Factory orders in Germany jumped 5.2% in December. So I don't know how that's affecting our futures markets here, but it seems pretty quiet. So I'm going to jump right into what we expected on Friday. Here's the expectation on Friday. We're opening in a gap at the time of the trader bite. Unfortunately, had some issues with the trader bite and had to be re-released, re-uploaded and released. And sorry about that. Not sure what the issue was. At the time of the trader bite, 22.85 was the trade, which is right against the high from the 2 days before that. The expectation is the market would likely be initiative, and that's why I drew this arrow here. The market's likely to move away from price and then find stability and then potentially roll over in the afternoon. That's what I was looking for on Friday. And then the other plan was for it to open auction, drop, find buyers ahead of the prior day's low or high, and then bounce back up and head towards that 2289 area. In either case, the 2289 area was expected to be the area that is likely to hold us up. So what did we get on Friday? Here's what we got. This is the 2289. that I was talking about. We ended up dropping on the open auction. Oh, it looks like my swings got moved here. Looks like an open auction, and then the market finds its buyers and pushes through the 2289 and then just balances out for the rest of the day. It didn't accomplish much for most of the day on Friday. This is Hypo 2 right here. Dipped down, didn't quite get to the prior day's high, so it leaves us with a gap zone here. As soon as I update the flex levels, I haven't inputted those in. For those who are on Investor RT, you'll get the flex levels here this morning as I update. But we moved down, we left a gap behind, we pushed up. We've got a pretty strong consolidation on Friday. Overall, nothing to write home about. I mean, we moved the point of control up clearly, and we are back in the upper bounds. The better, more clear picture comes from looking a little bit farther out. So if we look at the daily here, you could see that this nasty long balance here, including these last few days from last week. After the gap down, we moved back towards that 2264.50. We traded the heck out of it, and then we're bouncing back up, and we're inside of this 3-day range. That is where the 2289 comes from, and you can see the point of control is very, very sharp. This portends this is likely to give us an additional new high coming into the week. We're likely to continue to push higher. We cleared the low volume node. We've moved away. We've tested and moved away from the point of control. We're likely to continue higher. The market is looking to base here. It's holding this base here. So you got to watch this profile, the MC over the next few days. So this little profile here is fairly important. It's a double distribution profile that we left behind. Friday's high is the upper distribution, is the upper high volume node. You know, it's a double distribution, and then we ended up we're ending up opening somewhere in the middle of Friday's range, right up against the MC point of control from these 3 days. So we are completely in balance again, consolidating, picking up energy, whatever you want to call it. So as we're reviewing the past, one of the things I like to do, especially on the weekends, is to look at what the week has accomplished, right? So if we look at the weekly profile, this shows us how the market is progressing. Just so you know, the yellow or the gold is Monday's action, and then the blue is Friday's action. It's interesting to contrast where the Monday was versus the Friday. The little asterisk that you see here is where the market ended up closing on Friday, and look at what we've accomplished last week. Essentially, let me zoom in here. Essentially, what we did is we opened on 2 weeks ago. We opened on Monday, we pushed through on Tuesday, we gapped up Wednesday, pushed higher Thursday, and we finished Friday at the high. Then we gapped down last Monday. We pushed lower on Tuesday. You can see there's the 3 dots there, or 4 dots below Monday's low. So we are starting to do. It looked like we're starting to do a to one time frame downwards on Tuesday. Then Wednesday, which is the red, reverses that and starts heading higher, and then Thursday sits in the middle, and then Friday pushes back up. And where do we end up? We end up closing higher from 1 week to the next, and we are back up here, and we're currently trading in that area. So right now we're trading 2287.75 right in here, and so we're back in this upper distribution. So you can see how kind of systematic the market has been, and it's it's tested lower, it's moved all the way through. Look at the low. There's the 22.6450 or so from the prior week. That brings all of this balance into play. We've tested it from above. This is as clean an auction as can be. Really, we tested it from above and then we move back away. This is a clean, clear test of the prior balance before we continue higher. It's likely to continue to break into and above the 2300 zone going forward. This is the higher probability play. There's no certainty in trading. There just isn't. If there was certainty, the market will cease to exist. So here's that week broken up, and you could see methodically after the Tuesday low, it was a very choppy week, very choppy, breaking highs and breaking lows and so on. And we gapped up on the strong non-farm payrolls number, and we ended up finishing right up against the upper MC point of control, right up here. So you could see this high volume node is right up against the MC point of control from these 3 days from the prior week. So that's what we ended up with. Let's collapse this. That's what we ended up on the week. The overnight session brings us something a little different in that the overnight session has had a pretty good range so far, about 10.25 points. We don't see that very often. The last time we saw it clearly break the 10-point range was the non-farm payroll on the big run up. But overall, the overnight session opens and starts downwards. Then it finally pushes the high of Friday. How much does it push the high of Friday by? One tick. One tick. That's it. That's all it accomplished yesterday. So what we have is a failed auction high versus the prior Friday's high at 94, and then sellers step in, and now it's in sell mode. This looks heavy to me until we get back up into the 91.25. I'm expecting this market to be responsive this morning. I'm expecting it to try to head back up towards the 94.25. So as we look at what we've got today, we're likely to open in an open auction. I'm looking for the market to make a squeeze up into the 22.91 half area, the close, and then look to balance in this zone and then potentially squeeze higher as the primary hypothesis. I'm looking for a completely responsive market this morning to push back up into the balance of Friday. Very sharp profile on Friday, P-shaped profile. I expect it to get back up there. If it does not, if we open this morning and start to squeeze up and fail to do so and start attacking that low, I'm looking for it to pull back, push through into the 2280, 2279.75 high right in here in the gap zone, and then find a higher low or a corrective rotation here and get back into the range. I do not expect it to fail lower. This is hypo 2. Of course, the better hypo is to get responsive, tag the point of control, then start walking back towards the MC point of control from the last few days. The target then becomes 22.75.75 for sellers to step in. I just don't see that happening. That's hypo 3, but that's the one that has the most rotations, volatility, and opportunity for gain and loss. So that's how things are shaping up. I'll leave you with that thought. Also, I want to remind you that tomorrow I'm doing a webinar for Futures IO. I'm talking about information versus price risk for those people who trade and need confirmation. If you find yourself constantly waiting for confirmation from the market to trade, this might be a webinar for you. Check that out. The invitation is in the description of this YouTube stream. It's also being retweeted and tweeted on Twitter. My Twitter is, of course, my Twitter is at FutureStrader71 or twitter.com/FutureStrader71. Good luck today, and I'll catch you tomorrow. Take care.